Hi there, good afternoon. I'm Farrell Macdonald, a realtor here in Toronto with Royal LePage. And today I'm here to present to you my local real estate market update for the month of April 2020. So we're going to start with an overview of what is currently happening here in Toronto in the real estate market and how it compares historically, going back about 6 years or so. Who is active in the market right now? Who is actually buying and selling in the midst of a global pandemic? As well, I'll be including some tips for anyone who may be considering a move in the coming months amidst all of this. So a little bit about my background. I'm a former accountant, so I love numbers, I love charts, and they always tell an interesting story, I think. So I try to share that with clients and people that I know. And I've served on our brokerage's advisory boards, just helping to develop some best practices and raise the bar of professionalism. And I'm a trainer at our brokerage, so I help new realtors coming into the business and into the company get established and set up a business plan, that kind of thing. As well, I work with some experienced realtors where we share ideas, again, on best practices and how we can advance our businesses. I was a featured speaker in a podcast called Real Estate Keeping It Real. So if you have some spare time and want to check that out, there's all kinds of interesting and lively discussions there. And a little disclaimer, these views I'm expressing are my own. I spend a lot of time going through numbers and developing my own opinions, but also gather perspectives from other experts in my life, mortgage people, home inspectors, economists, just to put everything in perspective. But these are my own views. And if anyone is relying on any of this, please consult your trusted advisor first and make sure that it's appropriate for your own circumstances. And one last thing, none of this is intended to solicit any parties who are currently under contract with a real estate brokerage. So back in February, back in March, I started rolling out my overviews for the year, and we only had 2 months of data at the time. And I had actually taken a look back at 2017, 2016, 2017. Here in Toronto, we saw an unprecedented year-over-year price increase approaching 30%. It was just bonkers. And a lot of decisions were made on the fly, a lot of hyper speculation fueled this excessive froth that many people call it. And unfortunately, some of those properties never fully recovered. The sellers were never able to achieve the price that they had paid. So I was hoping that we could learn from some of that and look at some of the dynamics around that and hopefully avoid that going forward. Now, back then, the catalyst for the precipitous drop that followed all of that was not a global pandemic. It was actually government intervention. So the government here implemented a mortgage stress test, which in a nutshell meant buyers had to qualify at the higher of the posted 5-year fixed rate or 2% above the rate the lender was willing to grant them. That, in addition to a foreign buyer tax, which cooled off the foreign investor market, and as well, rent controls were expanded so that all rental units, regardless of their age, were now subject to rent control. So those three factors combined are believed to have cooled things off to the point where we saw approximately a 20% drop towards the end of that year. Leading into 2018, there was real estate activity, but it was much more measured, and we didn't experience a lot of the big peaks that we had seen in 2016, 2017. So that more moderate activity continued right into 2019, approximately the middle of 2019. But then we started to see an uptick again. And some people, because it carried right into 2020, the first couple of months of 2020, some people thought this was reminiscent of 2017, and we were afraid we were going to be experiencing the same cycle all over again. So that was the impetus behind my first market update. Now things are looking a little different, and I'm hoping we can dive in and still learn some of the same lessons from 2017 and apply them to what we're experiencing now in the midst of this COVID pandemic. So here's the market at a glance. Typically, When we're looking at any month's worth of information, we look at the average price. These are the leading indicators. So the average price tells us which direction it's headed. The number of sales tells us how many people are actually executing transactions out there. And the days on market refers to how long those transactions are taking to execute. So in April 2020, looking back to last year, last April, we only saw a 0.1% increase in the average price. So it's essentially flat. The number of sales, however, dropped 67%. That's approximately 2/3 compared to what they were in April 2019. And days on market, the length of time transactions were taking to execute, was down 8%. Now, looking at April 2020 compared to March 2020, just before during the month where the lockdown was first announced, we saw an average price drop of 9%, sales down 63%, so also approximately 2/3. But the days on market is up 41%. I thought that was really interesting. So rather than just take all this at face value, I wanted to drill down and find out how we could experience a 0.1% increase year over year, but then have a 9% drop in just 1 month. So I wanted to find out where this was coming from and what some of the other factors are. So let's look back here in Toronto over the last 6 years. This is the average price in the entire Toronto board, which extends from Oshawa to Oakville. So it's quite a large geographic area, actually. So it's important to keep in mind it's a blended number. The green line is Toronto proper. So that's anything with area code 416 and how that compares to the overall Greater Toronto area. So they do run very, very similar in terms of the trend line. Toronto's always running a little higher because it's a large urban center, but very, very similar. And you can see here in 2016, 2017, that's when we experienced that dramatic rise in the average price, which was spooking some people. And then you can see the drop towards 2018, and then it starts to pick up again quite gradually. But after the middle of 2019, you can see it's taking off again. And that's started to raise some alarm bells earlier this year until COVID took over. So looking at January to April, same thing, going back 6 years. This is typically how that period has been running back to 2014. Again, no surprise here. You can see 2016, 2017, a dramatic rise in the average price. That's how we ended up with approximately a 30% rise year over year. And similarly dropped about 20%. Very slow but moderate activity, 2018 to 2019. And that's when things really picked up again. So similar kind of trend line. Now, one of the things I look at, which has been quite consistent historically, the volume of sales in April and how it relates to the first quarter of the year. So the sales activity in January to March. You can see going back to 2014, it averages about 50%. So the sales volume in 1 month, April, is typically equal to approximately 50% of all the sales we've seen in January to March. That's been consistent, except for 2020. It's down to only 15%. That's where we see the reflection of the 2/3 drop in volume. But let's look at how that was broken out. Another metric I look at is the length of time that properties are staying on the market. In a balanced market, this ratio we're looking at here is approximately 45 to 55%. That reflects a balanced market. That is an indication to sellers what your chances are to sell within 30 days, within, say, a month. So it's been back to 2014, that was more of a balanced market. 2015 started to be a little less balanced. 2016, 2017, very, very heavily favoring sellers. Ask any realtor here. And properties were selling before they were actually hitting the MLS, the open market system. A lot of them were sold privately. 2018, whole different story. That's when the market had dropped back to much more moderate levels, just on the cusp of favoring buyers, but not quite. 2019, very, very balanced. But again, that's only up until around the middle of 2019. The latter part of 2019 saw some less moderate activity starting up. 2020 and this is April again, we're down to 28%. So very much a buyer's market in some people's minds. That reflects a drop in the activity. So how I go about determining where the price differences come from, I like to take the activity for the month and I break it down by price range. Keeping in mind Toronto is a very wide and diverse area. Looking at the lower end of the market, the less than 600,000, the middle range, starting to approach the middle range, 600, 800, 800,000 to 1 million is the sweet spot here in Toronto, the average price being in the 800s right now. 1 million to 1.5, 1.5 to 2, and 2 million plus considered the luxury end of the market. So looking at the first quarter, 2020 versus 2019, we can see the lower end drops off a bit, 600 to 800, fairly consistent. The 800 to 1 million, that's a bigger proportion over last year, 1 million to 1.5, et cetera, right up to the 2 million plus. That's typically what happens in the spring market. It reflects the nature of trading up in real estate, if you will. People will often move from a condo to a starter home, perhaps a townhome, or from a townhome to a semi or detached, from a detached to a larger detached, from a larger detached to a custom home, or even a luxury home. That's the typical real estate cycle, and this reflects it very nicely. Now, looking at April 2020, the proportion of sales at the lowest end of the market, we saw a little drop off. The 600 to 800, 1 million to 1.5, and 1.5 to 2, the proportion is virtually static compared to last year. The 2 million plus, we see a drop off similar to the lower end of the market. The 800,000 to $1 million range, that's the only range where we saw an increase in the proportion of sales. So this tells me that the bulk of the sales that we saw in April were happening in that sweet spot I talked about, the average price range here in Toronto. So this was really interesting to me. What it told me was the rest of the activity proportionally was fairly static. So it's almost as if we took the market and we shrunk it down, and it's just a smaller version of a typical April market. Dynamics are pretty much the same, except at the very low end and the very high end, we see a drop off there. So I thought that was interesting, and it went a long way to explaining what we're seeing. So this graph, and it's the last one, I promise, this shows us in any typical April, the proportion of sales as we approach the higher end of the market. Again, no surprise, it's the spring market, people are trading up. So the proportion of sales in the lower end is smaller. And as we work our way through each price range, we see an increase. April, the blue line at the bottom, that shows us the decrease in proportion as we go a little higher, which is, we don't normally see this kind of dramatic shift in any one month, but that's the nature of this pandemic we're dealing with. So who is actually buying and selling during a pandemic? A lot of people would like to know. So we have both buyers and sellers. They're both active out there. The buyers typically sold pre-pandemic. So if they had purchased something and executed an agreement before the lockdown, they now need some place to go. They now have to sell their home. So those are the people who are out there. If they've executed the transaction and have a longer closing, they've got a little wiggle room, but those are typically the first people out. Secure employment, but they have cash. There are individuals, essential workers as an example, they have their down payment in cash. It hasn't been subject to stock market fluctuations, and they're comfortable proceeding. Corporate relocations, these still are occurring, believe it or not. There could be an executive relocated here. It could be related to the pandemic. I know of one executive who is working for a large pharmaceutical company who's actually very actively working on a vaccine and being relocated to Toronto for 3 years. Marriage, we're expanding families, that's still happening. And those people may be in a position to execute a transaction. And renters, There are some renters who are in a great position to purchase their first home. They don't have something else to sell, and they see this as an opportunity. There could perhaps be less competition in the price range that they're looking in. So this could represent a good opportunity for them. The sellers may have bought pre-pandemic. If they purchased their property before the lockdown, they now have to sell. So you'll see properties that where there could be an underlying motivation, whether or not they're saying that. They could have a deadline. Maybe they haven't been able to extend the closing. The transition that's already planned. There are people who are not looking to hit a home run here price-wise. They can still walk away with a very attractive price, and they see no reason to put their plans on hold. They had this underway before the lockdown, and life goes on. Investors looking to free up cash. Now, this is an interesting one because we've seen quite an increase in the number of condos available for sale in Toronto, many of which are or were owned by Airbnb investors. Now, Toronto has also implemented a plan here that makes the Airbnb model a little less palatable. This is all before the pandemic. But with the pandemic, as everybody knows, travel has screeched almost to a halt. And a lot of those units were purchased on the assumption they would be receiving a minimum amount of income each month, which is just not there at the moment. And other investors, they may be looking at this as an opportunity to unload and free up cash for something else. Some people are still testing the market. These are sellers who may have bought, as I said, back in 2017. They may have bought at the peak and they haven't quite been able to achieve that price. And now they're looking to see who's out there who may be able to help them. Separations are still happening, estate sales. Financial hardship, we haven't seen a lot of that I'm aware of, and thankfully and hopefully we won't. If somebody was feeling financially stressed before the lockdown, this period we're in now, where layoffs and salary cutbacks could have put them into a position where they're feeling a little more motivated to sell. And family expansions. Someone's expecting a baby or planning a baby. They may use this as an opportunity to trade up to a bigger space. So there are some things I think we all need to consider at this point. This is temporary, even though the timeline to recovery is uncertain. It's very uncertain, but this is a temporary phenomenon because it's health related. There are all kinds of protocols in place to deal with that, but this is definitely deemed to be a temporary phenomenon. There's a lot of talk about pent-up demand in real estate. And if these interim measures that most governments have implemented do their job, we can come out the other side and pick up where we left off. Here's hoping. It is important to remember that real estate activity in most marketplaces, here in Toronto it does, it continues, but there are some restrictions to keep in mind. For instance, open houses have been ceased, safety protocols for showings, that kind of thing, but the activity is happening and deals are getting done as people get more comfortable with the new dynamics. I would suggest buyers need to be very cautious about appraisals and insert appropriate conditions. Typically, an offer will be made conditional upon financing, but I think it's important in the period of uncertainty to ensure you've got a formal appraisal from the lender that suggests they support the price that you've paid for this property. Sellers need to provide complete and high quality information upfront. Keep in mind that many people are going to be basing a lot of their decision before even stepping foot in the property. So having a floor plan, high quality photos, perhaps a virtual tour, all of the details, an up-to-date survey or a survey, accurate tax information, anything you can do to put your best foot forward and raise the confidence of any of those prospective buyers before they even consider stepping foot inside the property. And I think everybody needs to proceed cautiously and safely, but this can be done. Even though the volumes are way down, availability of listings is down, but there is activity out there, signs of life, and we just have to be very cautious. So no one has a crystal ball, including me, unfortunately. However, I think most people I speak to agree that our success in all of this depends on our collective ability to contain and manage the spread of COVID-19, which is easier said than done, but that's definitely the main focus. And the ability of people to retain ownership of their current homes. I say this because when I talk about the market being shrunk down, it's been shrunk down on sort of proportionally. So decreased number of active buyers and sellers, decreased activity overall, but it's been even on both sides. If we see a shift to one side, either a dramatic increase in supply, that could shift the effect on prices and the overall health of the real estate marketplace. The ability of consumers to emerge financially secure. The government measures that most jurisdictions have put in place, which wage subsidies, emergency relief payments, mortgage deferrals by the lenders, those things are meant to tide us over until the lockdown is lifted. If that is the case, then consumers may feel financially secure at the end of it, in which case life can carry on with some sense of normalcy. But the length of time before consumers are getting confidence in the overall economy, those last two items, I think, go hand in hand. If consumers feel confident about the economy overall, and they still feel secure in their job and haven't depleted all their savings, they will probably be more inclined to start eating out in restaurants, perhaps planning a vacation, and directing some funds towards those more discretionary items, travel, vacation, just thinking about the future. Consumer confidence rules the day. So if that confidence can be maintained at the end of all this, we'll likely see less of a downdraft on the real estate market. So here are the top two questions I hear the most. Are prices going to drop? Now, I started off showing you a 9% drop in the average price here in Toronto in April versus March of this year. But that's just 1 month. I don't like to look at 1 month in isolation, and it's too soon to say whether or not that's a trend. Everybody will be watching very closely to see what the May results look like. But so far, I think we're seeing what could be a softening of prices, which I don't think is going to be plummeting or any kind of market crash. But I think we can see a softening until people get a sense of just how long all of this is going to take to achieve economic recovery. And is it even safe to buy and sell right now? As I said earlier, yes. There are protocols in place. Most realtors have adopted these quite readily and been very professional about it. So it is safe to do it if those protocols are in place. That is not to say that people are sitting on the sidelines saying they're going to wait until this is all over. It's a personal choice. But those who have to, or those who choose to, it can be done safely. So I welcome questions and comments from you, and I thank you for joining me today. At the end of this, you'll see my email address. You can send in questions. I will respond confidentially and gather up any information you need. If it's not something I can answer off the top of my head, I will certainly ask around to get the information that you require. And I'll leave you with this. Those who learn from the past are empowered toward a brighter future. I do think there are lessons to be learned from that froth we saw here in 2017, where I think a lot of decisions were made without all the information, without all the facts, and it was driven mostly by emotion. So I think if we look back and try and learn from that and exercise a little more prudence and be thoughtful about it, we can emerge a lot healthier. So thank you again for joining me. Questions, comments can be emailed to farrell@farrellmacdonald.com. And I look forward to inviting you to join me for my next update, which will probably be about using the space you currently live in. There are people who have chosen not to move or can't move, don't want to move. But I think this lockdown has taught us that maybe it's an opportunity to make the best use of the space we have. So I think we're going to have some fun with that. And I look forward to you joining me.